Boy, that time flies when you're having fun, doesn't it, guys? I think it's about that time of day again here, folks. Joseph James here. It's Thursday evening. It's January 17th. And this, of course, is your nightly newsletter. You know, I help new traders just like you earn consistent profits every morning in my trade room using a simple three-step trading strategy. And my goal tonight on this video is to break down the best trading opportunities setting up for tomorrow, Friday morning's trading session. And we're going to cover crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. Starting off on oil here this evening, oil is nice and bullish here right now. We're running right into some major resistance from a previous swing high, but my plan is for tomorrow on the crude oil is to try to leverage the low of this hidden channel along with that key reversal line right above that 52 big round number. I got an idea on a couple different buying opportunities off of that low, and we're going to grab a look at that chart in a lot more detail in just a few moments. Over on the S&P here, boy, the S&P is also bullish. Nice big bull run. But as you can see though right now, we're starting to get a little bit frothy up around those highs. I don't want to buy high. That's the last thing I want to do. And anytime I run out of space overhead, well, you can probably finish my sentence. And if you don't know what the plan is when I run out of space overhead, make sure you stay tuned here because we're going to break that down on the S&P in just a moment. How about that Nasdaq? Nasdaq is looking a little bit more range bound than its S&P counterpart. It's a bull market into a trading range, and of course I'm going to use those two tries tomorrow to buy that low. Look at that beautiful reversal line hanging out there just below that 67 big round number. That's got me written all over it. We're going to put the plan together on that in just a few moments. And then of course, how about that gold? Man, oh man, rough and tumble. This thing is still chopped up inside of that range. Slight bear bias to it. Obviously, there's a triangle, there's a range on here, but there's one really big clue, and that has to do with this leg right there. That leg right there, that rejected leg, tells me exactly what I want to do for tomorrow morning. And of course, we're going to roll up our sleeves and get messy on gold here in just a few moments. And of course, last but not least here on the euro, right? Yeah, the euro continues here to trade sideways, much like gold. That's okay. We get a great plan for a range-bound market. We're bearish. Nice little tight range here on the euro. And of course, I'm going to use those range expansion levels. And I got that hidden channel coming down. We got a great plan to sell into those pops tomorrow if we can get that pop up here on that euro. So boy, oh boy, great video newsletter in store for you guys and gals tonight. We got a ton of great opportunities setting up for a holiday weekend Friday session. That's right. Don't forget we got a holiday on Monday. I'm going to break this all down for you guys in just a couple seconds. Before we jump into those charts, though, I want to remind you, make sure you never miss a video. If you're on our YouTube channel, make sure you subscribe to our YouTube channel, right? Or if you want to make sure you never miss a video, I'll send you an email every time I publish something new. Just go right to the blog here at sidewaysmarkets.com. I'll put all the links in the description of the YouTube video. All I need is your name, your email address. I promise never any spam. Hit that subscribe now button and then check your inbox because I'm going to verify your email so I can start sending you the link to watch our newsletter and everything else that we publish here at School of Trade. So make sure you grab that mailing list. Oh, and don't forget too, tomorrow morning, if you can't be with me tomorrow in the trade room, the next best thing is going to be to download all those charts right below the video tonight. If you're here on the blog at Sideways Markets, right below the video tonight, you'll see a big button there that says download today's charts. So make sure you download those charts. If you can't trade it with me tomorrow, the next best thing is to have those charts ready and executable tomorrow morning. And don't forget, if you have any questions, comments, concerns, drop me a comment in the comment section below the video tonight on YouTube. And what other videos do you want to see me make? Right? Give me some comments below the video. I'd love to find some new ideas for new videos as we go forward into 2019. So comments, questions, concerns, post those in the comment section below. And as always, I'm always here in the office. You can use that toll-free phone number in the upper right-hand corner if you have any questions about getting registered as a new client. We trade together every morning in our trade room. I use a three-step strategy every day with our clients, right? We'll talk more about that, though, as we go. You guys are busy people. So am I. I'm trying to beat the rain out there. Man, oh, man, it just keeps coming down here in Los Angeles. Well, I guess they can't say we're in a drought anymore, right? Because my backyard is basically a bigger swimming pool at this point. How about Friday? Tomorrow's Friday, January the 18th. Yeah, 18th. What's our schedule looking like here for mañana? Of course, we've got a bunch of news tomorrow, but only a little bit of it really matters tomorrow. That industrial production number at 9:15 is probably going to be the only real market moving event tomorrow morning. And that goes right hand in hand with what we've been seeing a lot of right now. I mentioned this pretty much all week this week. Between 9:30 and 11 o'clock, that's where we've been getting our best patterns here this week, and I would expect more of that to happen tomorrow as well. And of course, don't forget, we're in our trade room every morning at 8 o'clock Eastern time, right? So we'll be there early tomorrow, and then we'll get prepped up right for that 9:30 right opening bell. And of course, we get a lot of the action we're seeing this week between that 9:30 and 11 o'clock hour. So keep your eyes on that tomorrow morning. Tomorrow is also a Friday, right? So Friday mornings always tell us early in, early out, right? Friday mornings always tell us early in, early out. And tomorrow really isn't your average Friday. Tomorrow would be I would expect to be a relatively small window tomorrow morning because you've got that holiday weekend coming up. Monday the 21st, London markets are open, Asian markets are open, but we have the Martin Luther King Jr., a very special holiday in the U.S. on Monday morning. So markets are closed. You will see electronic markets working, but be careful on Monday morning if you trade in U.S. futures markets, right? The broad markets are closed, bond markets are closed, banks will be closed, most schools are closed. So it will be a very light volume day if you do choose to trade tomorrow. On Monday. Make sure you're aware of that. Be very careful. Usually on those kind of half holidays, like a Martin Luther King or like a Columbus Day holiday, markets will be moving, but again, because the banks are closed and the schools are closed, the bond markets are closed, it will be a very, very light volume day on Monday. So my plan tomorrow is early in, early out. We got that news at 9:15, and that will probably be the kickoff into that 9:30 opening bell, and then look for the meat and potatoes tomorrow, right, on that 9:30, right, to 11 o'clock. And then, of course, we'll get out of here, enjoy the rest of the weekend. Got some amazing sports on television. I'm a little bit worried about my Patriots this weekend. I'm not going to lie, man. Those Kansas City Chiefs, they look really, really, really good. I think any of the Final Four here right now could easily win that Super Bowl. We'll keep that for the end of the video, though, tonight, because let's jump in here and let's take a look at some charts here right now. See there's my New Englander coming out of me right there. Let's look at some charts here. All right, let's go. Looking into crude here tonight. We got crude, we got S&P, we got Nasdaq, we got some gold, and of course, we can't forget about that euro. Three big clues on the chart tonight on oil. First clue is this momentum, right? Nice, strong bull momentum going higher. Anytime I see this much strength in one direction, it's almost a guarantee that we're going to see a two-legged pullback and a retest of that high. So almost a guarantee. Anytime I see a strong move like that in one direction, look for that two-legged pullback and that retest that high. Now, how far do we think that two-legged pullback will go? I'm glad you asked. That takes me now to our second big clue of the evening, and that comes right here at this 5210, this reversal line. Now, you might see how they actually went up, they pulled back, and they used that reversal line. But in my experience, though, it's usually going to be a lot more separation, and then it will come back. So that is what I would call an untested or a virgin or a naked, whatever you want to call it, reversal line there. It's begging to be used as major support. So how far should we get that two-legged pullback? Well, I'd like to see that two-legged pullback all the way down to that 5210 area. But look, we got one more thing though here. The third big clue tonight is that hidden channel. Now, the reason why I call this a hidden channel is because in most trading books, they're going to teach you to draw the channel like that. Now that channel's great, but it's so narrow that there's not really that much money to be made inside of that channel, right? It's just such a narrow channel. So what I'd rather do is I'd rather get a little bit wider channel. And I know most people would say, you're crazy, man. This channel is not going to work very well. But trust me, these drawing channels this way works really, really well. You take those two highs, bring it down to that low. What that does is it creates this little tiny hidden level of support. And I'll be darned how many times we get beautiful buy setups, usually seller failures off the low of a hidden bull channel. And of course, we got looking for a pullback, looking for that two-legged pullback, and then looking to get that measured move, right? Finish off that measured move here tomorrow. I don't want to buy high right now. I don't want to buy high right now because you'll notice we are, right? We are kind of right up around those highs right now. So we're definitely bullish, right? We're definitely bullish, but we're a little bit too high to be buying right now. I'd rather sit tight here and wait to buy off of the low. So how do we do that, right? What would it look like to buy off of the low? What type of patterns would we be looking for here as we try to buy off of that low? Well, first of all, right, anytime I have such a strong move like that, I'm always looking for a second leg here. One option I'm waiting for here is going to be what we call a two-legged pullback pattern. One leg, let's get this a little bit smaller here. There we go. One leg up, two legs down. Now, draw that trend line coming overhead. Now use that trend line as your level of support, right? Now that is what I call a two-legged pullback setup. And it basically comes from the idea that it's one leg back, it's two legs back. That's what creates the darn trend line. You don't want to buy the first one here. You want to wait for it to up and back over, right? Get that two-legged pullback up over. And again, kind of my nickname for it is a 2LP, right? A two-legged pullback. It's very, very similar to another pattern here. If we don't get that two-legged pullback and we just kind of slice lower, right? If we just slice lower here below that moving average, pulling back to the low of that channel, now at this point, I'm looking for a combination of two setups right now. The first one's going to be a seller failure. I'll let those sellers try to sell off the moving average, right? Let them try to sell off the moving average. Once they try to sell off that moving average, now I know right where their stops are, right? Now we know where stops are, and I can buy right into those stops, right, as we go higher. So that's the first setup, or second one, I guess, right? The two-legged pullback was the first one. This is the failure setup. And then, of course, you got that pullback setup, right? The pullback setup now, we go up, we pull back, and we go, right? That'll be our next follow-through setup right there. And you can kind of see examples of this, right? 1, 2, failure, strength, right? Pull back and go. You can see good examples of those over and over again, right? On lots of different chart time frames. Very, very common patterns. So we talk about two-legged pullback. That's a failure, right? That's a failure. And then into your pullback pattern. But one more thing here, right? At this point now, as we start going higher now, right? As we start going higher now, I don't want to chase after the move as we go higher. So that sets me up for one more pattern here. And that leads me into what I call a trap pattern, right? A trap pattern. So boy, we are loading on, right? We're loading the boat here right now. So we've talked about, right, the two-legged pullback earlier. We got the failure, we get the pullback pattern, and then we've got that trap pattern, right? That trap pattern. All if we can get this pullback off the high. Right? So that's my plan for tomorrow. We might get all three of them. We might only get one of them. We'll know tomorrow once we get a few more candlesticks. And oh, by the way, if you want to see hundreds, literally hundreds and hundreds of examples of all of these patterns from real charts, right from our trade room, here's what I'll do for you. I'll put a link up top here for what I call my free trading course. It's part of my free trial. As part of this free course, you'll learn all the setups. You'll learn how to draw these hidden channels. You'll learn how I use the moving average. But most importantly, right, you'll see what it really feels like to be there with me every day in our trade room. You're going to love it. You're going to love it. Everybody loves the free course, right? So grab that free course in the upper right-hand corner. And then if you're not on YouTube right now, right, there's also a big red button right below the video tonight. If you look at that big red button below the video on our blog tonight, you'll see there's a big button there to allow you to register for that free course as well, right? Now, don't forget, register for the free course, and then I'm going to keep going here, right? So that way you get a much deeper dive into everything we talk about here tonight on that newsletter. Now, what if we don't pull back, right? There is possibility here we may not get a full pullback, right? We may end up going sideways here right up around these highs. So what's the plan then? If we don't get that deep pullback and we go sideways, now what do? We look for the two-try failure pattern. I want to see sellers try once, let those sellers try twice, and then I'm going to look for that move now going back up, right? Let those bears try once, let them try twice, two-try rule, and then we're going to buy with the appropriate signal going back up to retest the high. So if we don't pull back, right, look for that sideways movement and then look to get down so we can buy back up right off of that low. If we just keep on going here, right? If we keep on going here, just stay focused on traps, right? Stay focused on traps before we get to that measured move, right? So if we don't pull back and we don't go sideways, if it just keeps on going, just focus on those traps, right? Get below prior swings and we'll try to buy off the low of that bull channel. That way you're not buying high. Anytime I'm running into overhead resistance or I'm almost up to that measured move, I don't want to buy high, right? I want to buy low. So look for those traps here. Now, speaking of low, what would a reversal look like? How would this market reverse? Well, I have something which I call the 1, 2, 3 reversal. It's really, really simple. 1, 2, 3. There are 3 components to a reversal. So whenever somebody asks me, how do you know when the trend changes? I always tell them, look for this pattern. Here's the first one. 1, a strong counter trend move. 2, a pullback to the moving average. 3, yeah, that's 3. 3, a strong move off the moving average, right? Strong move off the moving average. 1, counter trend move, strong, right? Strong, strong, strong. Counter trend, strong, strong. That's the key here, right? It's got to be like, whoa, right? That type of strong, right? It's a real strong move down. Second thing is a test of that moving average. If we don't test the moving average, it do not count, right? It doesn't count. Number 3 is that blast off the moving average. The blast off the moving average is the sellers walking away. Sorry, in this case, the buyers walking away and basically giving those sellers full control. So once I have that 1, 2, 3, now what do? Do I just chase after it and sell down here? No, we don't want to sell low. I want to sell high. I want to sell at resistance. What I'm going to do is I'm going to mark up that low. I'm going to mark up these lows. I'm going to mark up that high, right? Another one of those hidden channels. I know you won't find that being taught in any of the old school trading books, but then again, none of the stuff you learn in the old school trading books works anymore, right? You've got to use new material, right? And you get that from watching charts every day for almost 15 years. So looking for a sell off the high of that hidden channel. Where's our target? Yeah, target's right back down to retest that 51.29. So am I open for a sell? Absolutely, right? I'd be foolish to say I won't sell tomorrow, but I have to see some momentum shift back to the bears. All right, we got a good plan here, right? Good plan there on oil. Oil looking pretty good here for a pullback right now. All we need now is a little bit more time. All right, how about some S&P here? S&P, beautiful chart here right now on that Emini. Man, this thing ripping higher here today. Just incredible, right? These short covering rallies. I wonder if those all-time highs are starting to get lonely up there. I'm sure they're starting to get prepped up for getting retested. Anyways, 3 big clues on the S&P tonight. 1 is the bullish momentum. Now, we talked about this. Anytime I see a strong move in one direction, what do we usually see? A 1, 2-legged pullback, and then where's it trying to go? Yes, right back up to retest that high. You can see we're almost there right now, right? So what we're looking on crude oil is pretty much what we're looking for, what we already got here on the S&P. So use this chart as an example of what the oil may look like about 6-7 hours from now, okay? So nice, strong bull momentum, right? That means we want to buy that 2-legged pullback. A little bit too late, right? We already got it earlier on. Now we're making our way back up. And where's the objective? The objective is to retest those highs, right? Retest those highs. Second big clue is that measured move, right? That measured move. The reason why this is a big clue, we got 1 leg, we've got 2 leg, because something tells me that measured move, as we break higher here, is going to become a nice little level of support if we need to, or could become a level of resistance for a possible failure later on. We're going to watch that area around 26.33, and we'll break that down here as we go. The third rule, right? The third rule is a pending range, or the third big clue, I should say, is a pending range. What do I mean by that? Well, you're going to see in the Nasdaq what a real range looks like. But if this thing continues to fail to go higher, it looks like we're going to start sitting inside of a range here. It does look like this market may get a little bit hairy here, right, and go into a range. And so we'll talk about that in just a moment as well. Most important thing right now, though, is we are bullish, and we're just about to retest that high up around 26.43 to 26.45, right? You could go in and add that on, and you really could call this a whole, bearish zone up here, resistance zone up top here if you wanted to, right? But the bottom line is we're getting a little bit too high to start buying here right now. And what do we always talk about when we're too high to buy? Traps. So that's the first short-term opportunity here. If you can be trading the overnight, right, looking for that pull back, that trap low, right, off of those prior swings. So a nice big juicy green signal candle off that trap. That'll be the short-term opportunity now to finish off that move going higher. Now, another thing I'm watching for, right, is if this thing collapses off that high. If we see it collapse off the high, now we know we have a range. Okay, so if it comes back and we get that little trap below that prior swing, okay, that will finish off that move going higher. That'll be in the short term. Okay, but if we collapse off the high, right, if we collapse off this high, now this will have to be seen as a trading range. And if it becomes a trading range, kind of think of it like this, right? Kind of a range up here, right? If that becomes the range, and you'll see a little bit better picture on the Nasdaq in a moment, but if we do collapse off that high, okay, all I'm going to do now is treat this like a bullish trading range. Now, we've talked about ranges quite a bit lately because there's been a lot of ranges in the chart, right? How do we trade a bull trading range? We buy below the range, and how do we do it? We use a specific pattern called the two-try failure pattern. We wait for the market to pull back. We wait for the test of the moving average. We wait for the sellers to try a second time off the moving average. And then we look for a nice strong signal. Once I get that strong signal, I'll look to buy it going back up, right, to retest that high. Okay, not the big high, but the high of that range. So if we do collapse off the high here, that's going to tell me this will be seen as a range. Whether you want to call it a triangle or a rectangle, it's not going to matter much. What I want to do now, though, is try to get that one try, that two try, and then buy it back up. Now, what if it does collapse? What if it collapses? How would it turn bearish? At what point would I know this market's a bear market now? Because, I mean, it could easily reverse. We get headlines from China. We get headlines all the time right now about trade, right? The darn government is shut down, for crying out loud, right? This could easily reverse. How do we turn bearish? 1, 2, 3, reversal, right? What does that look like? No, not a snowstorm. 1, 2, 3. Again, you want to see one strong move down. Now, I know what you're thinking. Once I see a strong move down, why don't I just sell that pullback? Why not just sell the pullback? Well, because again, we're looking for it to be a buyer here at first. I'm looking for it to go right back up again. That's the more reliable trade, right? It'll look just like this one did, right? That was a strong move down. It goes right off the moving average, second try, and bam, right back up. In fact, you could easily say this is the 1, 2, there's your pullback, right? And then there's that trap we're looking for, right? So we've already seen on the S&P what we're anticipating we're going to see here on the oil. Again, 1, 2, back up, or 1, 2, run. Get that 1, 2 run, mark up that low, mark up that low, up to that high, create that hidden channel, and we'll look to sell off that hidden channel. Where's my target? It's back down to retest that low at another big round number, right, at 2,600. So very easy, maybe not easy, but very simple plan here for us right now. Short term, looking for trap setups below that low, right? A little bit more medium term here, right? If we do pull back, we'll call it a range, 1 and 2, back up. That's the plan if we get a range, right? Now, what if we retest the high? Then what do we do? What's the plan if we retest the high here? Okay, there's two things you want to think about if we retest the high. There are basically two scenarios when we have a retest of the high. One scenario would be we blast right through the high, right? SpaceX style, right? Blasting right through it. Or the second scenario would be we test the high and we fail off the high. Profit taking, right, if you will. Profit taking off of that high. So those are the two scenarios we want to prep for. Now, the first scenario is the most common. Most of the time, we'll retest that high and we'll pull back. Okay? If that's the case, this now becomes one big range. And of course, we already know what a range means, right? It means buy down here with what? With the two-try failure. 1, 2, back up. Now, guys, I'm going to give you a forewarning right now. The two-try failure pattern, there are lots of variations to it, and you're going to want to learn them all, right? I would say there's probably 1, 2, 3. There's 4 different variations to that two-try failure pattern, right? And of course, I cover all of them inside that free trading class, right? Grab that information icon in the upper right-hand corner, register for that class, right? Or grab the info button below the video on our blog, right? And that'll get that, right? You'll get access to the video class right there as well, right? That free trading class. So we go up, we double top, we pull back. This becomes a trading range now. And of course, we go 1, 2, right back up again. Okay, relatively easy. And then again, if that turns into a reversal, right, now you know where that new channel is, how to find that. Okay, that's easy. What about if the market goes higher here, right? Well, here's the challenge. If the market goes higher from here, the next measured move is just barely now, right? It's just barely overhead, right? So that next measured move is just barely here. This should be yellow. 2647, 2648 area, right? That'll be your next measured move there. So the first things first, I've got to get through that area right there. It's really going to be a strong leg. Okay, none of this whole up and then wishy-washy up top here. If it goes sideways at that high, it becomes a range, and again, 1, 2, buy the low, right? So the same thing applies even if the range changes, right, as it goes higher. Okay, so we know there's going to be some resistance up here. I want to see it really blow right through it. So what's the plan? I want to see it blow through it, and usually what happens is it will create a spike and channel, right? It'll be a spike in channel. You'll see it, right? It'll blast up, it'll pull back, and it will really start cooking as it goes higher. Usually what happens is you'll have sellers trying to sell the high here, and the fuel, right, of this move going higher now, right, is just the seller stops getting hit. That's all that is, right? It's not buyers actually buying up there. It's just sellers getting whacked, right, and becoming buyers, which sends the price higher. Once that happens, though, mark up that low, and we're looking to buy whatever pullbacks we can get on that first pullback to the low of that channel. And again, watch the highs here, right? Because those highs are going to tell you where the low is. I'm illustrating it up for you right now. I mean, I don't know what the candles will look like tomorrow, but once we know what they look like tomorrow, then we'll be able to put the plan together and buy the low of that, right, of that channel. So a lot of different scenarios here right now that we've covered here on the S&P. Don't forget, you want a recap of it, right? Hit that rewind button and watch it over again. Looking to buy low, looking for traps, and we don't want to, of course, buy right into the high on that, right, of that high up there at 2645. Let's keep going. S&P is looking good. How about some Nasdaq? See, the Nasdaq is looking a lot like a range right now, right? So this might be what ends up happening here, right, on this S&P. So just going to keep your eyes, right, on that. Now, 3 clues on the Nasdaq. Very similar, but very different at this point. We've already got what feels like a range here. So we already have that bullish momentum, right? They went all the way up to that measured move. Nice, big, strong move. And you can see they are really trying to get a retest of that high. The odds are pretty good. This Nasdaq's going to eventually get back up to retest the high. The question is, how do we get in on it, right? What'll happen is you're not going to buy up around those highs. You'll want to buy nice and low and then leave the runner, right, up to retest those highs, right? Because what's going to happen to get this price back to those highs is probably sellers getting stuck, and then that fuel, that short covering rally will just whoop and just suck that price right back up to retest that high again. So bull momentum tells me buy at support, right? They already did that and they're struggling, right? They're really struggling right now. What does the range tell me? Second clue is the range. Now, you can call this a triangle if you want. I think a triangle fits pretty well. I've got it as a little trading range, a little rectangle. It all tells us the same basic stuff, right? If that's my range, I want to use that 2-try failure pattern, 1 try, 2 try, and buy below that range. Let them try once, let them try twice, and then we'll look for that, whoop, right back up into those sellers' stops. Because what's happening is when we get that big move down, when I get that big move lower here, the sellers in the market are going to say, see, I told you, we're going short. Ready? Let's sell the pullback. Right? The problem, though, is it's not a bear market. It's still a bull market. And so when they try to sell that pullback right now, everybody goes, oh, man, your pants are down, right? I'm going to buy right into those stops, right, and try to run this price back up. Now, remember, we got that, right? We got that trend line coming down overhead, so make sure you get to it early on these patterns, right? Again, it's going to be that failure pattern, right? It's going to be that pullback pattern. And then if we can get through it, we can use that pullback pattern there too, right? Off of that trend line as well. So a couple different options if we can get that pullback right now on this Nasdaq. I think the hardest part about this is going to be this range. If we just sit here quietly, right? If we just kind of sit here quietly, you're going to still have to wait patiently, 1, 2, and then back up to buy off of that low. The third clue here is that reversal line. We've seen a lot of these this week, that reversal line here. Reversal lines this is a very obvious reversal line here. It's an obvious level of resistance that we just haven't used yet as support. It's almost a guarantee at this point we're going to get a hit of that, right? 66.96. The question is when does it happen, right? Do we get a pullback right now? 1, 2, back up, or maybe we do finish this rally higher and then we pull back, right? Then it becomes a range. And then, of course, it's 1, 2, back up from there. This is the same plan, by the way, that we just talked about on the S&P, right? So if we do double top at the highs, and keep in mind, guys, double tops do not need to be exact double tops. They just got to be within striking distance of the top. And then we look for that one, right? That 1, 2 try failure pattern. And again, I love these little hidden levels, right, of support here. Right? These little hidden levels of support. A lot of people aren't looking for them. And so what happens is when a price rolls lower, the sellers in the market will get trapped, right? And when they get stuck and they've got to get out, right, it just throws gasoline, right? It throws gasoline on the fire there. So finding those little hidden levels of support that also kind of rope in the opposite side of the market. In my experience, trading breakouts, buying high, selling low never worked very well for me. What really worked best for me in my career is finding opportunities to catch the other side of the market, right, stuck. And so in a bull market, I'm always looking for opportunities below the moving average to grab those sellers, right, and ring that bell, right into their stops there. I always used to joke around with my first trading coach about the fact that I felt like I was always the person, right, fueling the big moves, and I eventually learned how to be the fuel, right, for those big moves. We'll talk more about that though, right, in our trade room. So Nasdaq, of course, very similar here, right, on the S&P, right? If we go up, double top becomes a range, 1, 2, back up. If they run 1, 2, 3, we find that new channel, right? Find that hidden channel and sell off of that high. Remember, I'm not trying to sell that first pullback. That first pullback will not be very reliable. I'm going to try to sell that second pullback after we get that 1, 2, 3 reversal. Then I can be confident, right, in selling that pullback there. So pretty easy, right? Pretty easy. If we go higher here and really blow through it, right? Don't forget your next measured move at that point. We'll take this one. Right, your next measurement of that point is not very far ahead. So if we do end up going higher here, right, if we do end up going higher here now, you really got to be careful. You don't want to buy into that next measured leg. So if we go higher, right, if we go higher now, what's the plan now? We're going to be running out of open space. So what do we look for? Traps, right? Traps. Anytime we have a bull market, okay, I want to be a buyer, but when we're running out of open space because we got that measured move, right? I don't want to buy a pullback. I want to buy a trap, right? Getting those traps up there. And again, this is very common. It's very common for a market to push through the high, but then if another level of resistance right there, and if that level of resistance is within striking distance, wait for the trap low. Wait for that trap low, right? Those little tiny hidden levels of support that you can use to catch the opposite side, right, on the wrong side. Let's keep going. Nasdaq looks beautiful. How about some gold here tonight? Got some yellow metal. All right, 3 big clues on the gold tonight. We got bear momentum, barely. Very, very subtle bear momentum. We've got a triangle on the chart tonight. That's really the big clue here. We get the trend line, right, coming down, trend line coming up, right? And of course, we get a measured move here that will likely be the target for those sellers, which puts us right around those lows again. So, bottom line is we get a bear momentum, right? That bear momentum tells me I want to sell high, right? Give me up overhead, right? Bear momentum says sell high. A trading range, Okay, this is a triangle, but triangles, rectangles, right? They all give me ranges. Anytime I see a market inside a range, if there's a slight bear bias to it, what does that tell me? It tells me sell. How do I sell above the highs of a range? What pattern do I use? The two try failure. There we go. Now we're talking. Right now, what about the lows, right? Could I also buy the low? I think you'll probably be able to. You know, it's very much a neutral market, right? It's very, very much neutral right now. Boy, that looks ugly. That looks ugly, man. That just looking at that chart will give you the shivers. That's a very ugly chart. But the bottom line though is we just keep buying low, selling high. So measured move is down there. So of course it is a range, right? It is a range. I want a 1-2 back down. I want a 1-2 back up. And again, there are lots of variations of the two try rule, which you can learn more about inside of that free trading course that I linked up in the upper right hand corner as well as below the video tonight on our blog. Although there's one thing on this that really gets my attention, and that is this move right there. You'll notice what that move didn't do. And remember, and I talked about this, I believe, earlier this week at some point on the newsletter. Most of the time, it's what doesn't happen, right? It's what doesn't happen. That's the most important clue. Now, what do I mean by that? Well, let's look at a range. Anytime we have a range, whether it be a triangle or a rectangle, we use a technique called rotation. And that means that we're looking for rotation back and forth, back and forth, back and forth, right? Rotating back and forth. So when I look at this chart, and I can easily see, I mean, this is a very long-term trend line there. I can easily see here right now, right? We're rotating back and, wait a second, it missed it, right? So the fact that it missed that rotation back and forth here now, that's a big deal. It's a big clue, right? What that basically means is sellers right now, right? They didn't get their target. And so they're going to be constantly trying to finish off that target and probably, right, going to try to go at a higher price to try to get it, right? Because if they couldn't get enough sellers, right? If they couldn't get enough sellers to sell and get that target right back at the low of that range, what's going to happen is there'll be more sellers now waiting up above that range, and they're going to try to get that puppy right back down in, and that will most likely, right, get that job done. So a lot of times the most important clue, right, isn't what did happen, it's what didn't happen. You know, and this of course comes with experience, obviously. You know, any professional you talk to will always say, I'm always looking for things that are missing, right? What doesn't make sense? What doesn't fit inside this group? What doesn't fit right now is that big strong move down and they couldn't even get the job done, right? Couldn't get the job done. So what that tells me is they're going to try to go to a higher price here right now to get the job done. So that's where my plan takes me here for tomorrow. So as we go into gold here, again, gold continues to be real range bound. We want to buy low. I want to sell high. I want to avoid that middle, and I want to use that two try failure pattern. One option for the two try failure, right, is to go up one, pull back to the moving average, right, go up twice, and then look for that sell going back down in. This is the same basic idea that I talked about before. Right? As we go higher, for example, look at this example back here, right? As we go higher here, we go up, we pull back, we go up, right? And we fail back down in. A little bit choppy in the overnight, but that's the general idea of it, right? So we go up, right? Nice strong move up. The buyers in the market go, see, I told you, that chat room told me they're going to go higher here. Well, it's not a trending market though, right? It's a range bound market. And if we try to trade every single breakout that we see, well, you probably would be watching this video right now. You'd be broke, right? You'd be out finding a job right now. We don't want to trade breakouts. What I will do though is I'll use that strong move up. I'll use that as a reason to anticipate those buyers. And I'll wait. I'll wait for those buyers to try one more time to buy off that moving average. Now, don't get me wrong, guys. This could easily blast higher. And if it does blast higher, what do we have? A breakout. Right? There's the 1, 2, 3 reversal, but it's a 1, 2, 3 breakout. Mark up that high, mark up that low, and now we're looking to buy that pullback to the low of that channel. Okay? So that's ready to go for tomorrow if we do get the breakout. But assuming though we don't get that breakout now, right? We get the one try going higher, the two try off the moving average now. Now think about it. If you were a buyer, at what point would you start freaking out, right? At what point would you start waving the white flag? probably once we start making that lower low, right? And that's where I want to be selling. Once I see the market start heading back towards that low, right? That's when I start selling into those stops. I anticipate stops are hanging out right below that low, and what we'll do is we'll look for that sell going right back into that range. Now from there, remember, we don't want to chase after that, right? I don't want to chase after it as it goes lower. So what do? I like to find what I call a hidden channel. I'll mark off that low, mark off that high, and that creates another spot here for us so we can avoid selling low, we can avoid selling into that range, and we can sell up at resistance, proven resistance, I might add, right, for another move back down in. That is one variation, right, of the two-try failure. One try, two try, and then back in. But now let's split this down, right? And again, you know the plan if we break out, right? Find that new channel and buy that low. Okay, so what if we get stuck in the middle then, and then we rifle lower, right? What if I'm wrong about the correction higher? What if we go running lower here? We go lower, we finish off the measured move. Now what do? Well, remember, just like I talked about in the Nasdaq and the S&P, we don't want to sell low. We don't want to sell the breakdown here, right? This is major support down here. I don't want to sell down there. As convincing as that strong leg is, I can't sell it. So what do we look for then? Well, if we do run lower like that now, I want to buy back into that range. But how can I do that? Well, again, momentum is relatively bearish right now. So your typical or your standard two try, 1 and 2, right, might not even happen, right? May not be a very good looking setup. So instead, we might get that strong move down, and then we've got to walk our way back using what we call a nested two try, which means I'm looking for the sellers now to try once, try twice, and usually what will happen is this will put us just above the moving average there, right? And that will give us our 1 and our 2, right? And now we can look for that buy then going whoop right back up into that trading range. Another variation between you, me, and the rest of the YouTube world out there, right? Another variation is to look for it as a trap, right? Not going to happen as often, but this is what I call almost a guaranteed paycheck, right? You've got 1, you've got 2, and you're looking for that trap right down at that low. So what happens is that trap is actually trapping in more sellers, right? Lots of sellers like trading breakouts. Okay, once I see that little breakdown, right, trap them in, and we'll run the sucker back into that range. So there's 3 different variations, right, of that two try rule. I've got a few more tricks up my sleeve here somewhere. Maybe not this shirt. It's at dry cleaners right now, right? But I'll find that shirt and we'll break those tricks out in that free trading class. Pardon my corny trading jokes there. I'm trying to have some fun with you guys here, trying to liven this stuff up here, right? Grab that button, grab that free trading class, either in the upper right-hand corner, right, or below the video tonight, and I promise you'll love that free class. Last but not least here, right? Last but not least here, it's the euro. It is the euro, isn't it? Let's break that euro down here. Boy, they still can't get the heck out of each other's way right now on the 6E. A lot of this is because of trade talks with China. It seems like every day right now the soap opera keeps going here. 3 big clues on the euro tonight before we wrap this newsletter up. First one is the bear momentum. Second one is the trading range. And third one here is that hidden channel. So looking at the first one here is the bear momentum. It's pretty easy to see we are overall bearish. It's very subtle, right? It's very subtle. It's not that much of a bearish move, but it is definitely on the bearish side. Combine that now with the second rule, or the second clue, and that is the trading range, right? What does a bear bias with a range tell us? Well, first of all, I take the range, right? I mark it up, I mark it down. That gives me support. That gives me resistance. As you can see, they're loving on this trading range right now. It's amazing how those range expansions work. Range expansions are another example of those little hidden levels of support and resistance, right? When most people think about support and resistance, they think about trend lines, pivot points, moving averages, Fibonacci ratios, but these hidden levels of support and resistance, right? Such as a trading range. Okay, take that trading range, which rotates back and forth inside that range there, bring it up, resistance, bring it down, support. You can easily see that's in play here right now. Another hidden level of resistance here. Oh, and by the way, trading range. What does the range tell us to do here? It tells us to sell high, 1, 2, back down, right? The 2 try failure pattern, or as I mentioned earlier, that nested whoop right back down in. We talked about that right a moment ago there on the gold. Same basic patterns. And again, if you're wondering all the details of this, just check out that free trading course and you'll see more than enough examples of that to get your arms around how that 2 try rule works. And then I got one more hidden level of resistance now. If I line up these lows, look at how well this channel fits. The lows look good, but look at the midline, right? That midline, like a glove, fits the top beautifully. But those are all pretty easy. Everybody knows about those. How about this bad boy, right? Let's put another little hidden level right on top there. And look where that level, look where it lines up. It lines up right around that high, right around that range expansion. That's what we're talking about. Those are the levels of support and resistance, right? Multiple levels stacking up on top of each other. That's what I'm looking for here, right, to find those patterns here. Now, as we go higher here, I'm looking for that 1, I'm looking for that 2, and I'm looking to go back down in. The one thing, though, keep your eyes on this. We may start seeing a bit of a rising support trend line. So we may end up going 1, and then what do we call this? You got it, 2-legged pullback, looking for that underbelly of that trend line, right, to then right back down, right into that trading range. Or maybe it ends up being a nested, right? Maybe it's a 1, it's a 2, and it's down from there, right? That could easily, right, be the case there. What if we go sideways here still? If we keep going sideways, the plan doesn't change very much. We're going to go 1, we're going to go 2. Well, here's the good news though. If we go sideways, we no longer have to worry about that trend line anymore, right? So if we do go sideways here, no more trend line to worry about. 1, 2, back down. If we go sideways here, right, sideways here, 1, 2, back up. It is that overall bearish momentum. So just like we talked about on gold, let them try to sell that sucker. Don't chase after it. Let those bears try once. Let those bears try twice. And we'll look for that buy now going right back up, right into that trading range. Range bound markets tell me, mark the range, find the bias, find the expansions, fade those breakouts. The range is easy. It's a bear bias. We've got the expansions. Now all we need is to fade those breakouts. And that, of course, means all we need is Father Time to help us out, give us a few more candlesticks. And, of course, we'll be paying attention here every step of the way. Wrapping up here for tonight, boy, I hope you guys learned a ton this week. And what do you think about the new format here for the newsletter? You know, I try to kind of push myself out of my comfort zone every evening for you guys here. I try not to get too much into a rut on this nightly newsletter. How about some feedback, right? What did you love? What did you hate? You can't say my ugly mug. I know, I apologize for distracting you on the video tonight, right? But give me some comments in the comment section below. If you like the new format, give me a thumbs up. Right? If you don't like it, if you don't like it, who cares about, I'm kidding with you. Give me a thumbs down if you don't like it, right? But I'm assuming most of you guys like the new format. But more importantly though, this weekend, give me some new ideas because I'm working on another video series. I'm going to be relaunching our psychology video series later on this year. And I need some ideas for what really is important to you. What would make this channel even better? Give me some comments below the video this weekend while you guys have some time in between football games. Who you got as well? I'm definitely rooting for the Patriots, but I'll tell you right now, I would not have a problem rooting for Mahomes and Andy Reid and the Chiefs as well. I'll tell you though, even LA, right? The hometown team, the Rams look really good this weekend too. I mean, boy, oh boy, I'm scared of being New England versus LA in the Super Bowl. Could you imagine that? Oh my goodness. Anyways, get out of here. Before you leave though, don't forget, make sure you register for that free trading class. Don't forget it's part of our free trial here at School of Trade. Grab that free trial, grab the free trading class. Right, well, I got your attention. Don't forget, grab those beginner intermediate, and advanced classes. We trade the strategy every day together in our trade room, Monday through Friday, 8 o'clock Eastern time. Grab the advanced course and become a new member of the trade room. I'm always here to help, right? I'm always here to help. Use that live support tool, and don't be afraid to pick up the phone and call me, right? I'll be here working hard for you guys at all times. As always, my name is Joseph. Hope you had a great week. But be well out there. Be nice to each other this weekend, okay? And come back and see us next time. Adios, amigos. Bye-bye for now.